Okay, testing. 1, 2, 3, testing 1, 2, 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your pants. Guten Morgen, how are you? Comment allez-vous? Everything right as rain? How's your mama? And your mama's mama? Your mama's llama? All right, so it is 8:05 a.m. on Wall Street. Yeah, it's a Thursday. Great. This means we're going to start looking next week. Well, today is also the last day of the month, last day of the quarter, so we're also looking into October. So that is fantastic. So I think we've had some portfolio rebalancing, and I think today or tomorrow we get on with it. So without further ado, let's get on with it. Let me remind you that trading is risky and it's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Therefore, please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonald. I'm a currency trader. I love Forex. I've been trading Forex for almost 20 years, and I still love trading Forex. And I imagine I will be here 20 years from... Wait, I'm already 70, so I don't know. Well, yeah, maybe I got another 20 years. That's pretty good. So thank you for being here. Thank you for subscribing to the Forex.Today YouTube community. There's almost 19,000 of us. That's pretty cool, because this is a small community, so I'm glad that small industry, so I'm glad we have such a tight-knit community. So thank you for being part of it. Thank you for sharing your positive energy and your focus and your drive. You give me the strength to get out of bed and do what needs to get done. So thank you for that. I appreciate it. I'd like to introduce you to tradersway.com. Why? Look, it's part of the life cycle of a trader. So maybe you're fairly new to Forex. You're coming in, you're like, how do I do this and how do I do that? And one of the questions is, how do you choose a broker? I'm like, that's a tough decision, especially when you don't know. Really, when you don't know, you're like, oh, they're all the same. They all have MT4, right? Yeah, your broker and MT4 are two different things. So yes, they might have similar trading platforms, but one will charge you higher fees, one will not pay you your swaps, one will slip you, which is a hidden way of basically stealing from you, or you can get a broker that you trust. Now, Trader's Way has earned my loyalty and respect. Execution speed is fast, spreads are narrow, swaps are huge. Hey, that's it, right? That's the big speech. So they've earned my loyalty and respect. If you go there to tradersway.com and open up a demo account today, then maybe over the course of time, they will earn your loyalty and respect too. So get on with that. Get that done. Okay, so I wanted to go over a few things before we get on with the technicals. Oh, slippage. Okay, Demo Trader says, can I explain slippage? You pull the trigger and nothing seems to happen. Okay. Interesting. So you're like, you wanted to buy at 183.72. Okay. And it might be 72.5. And you actually get put in 183.73.8. Okay. And sometimes what will happen is it's so small you only see like 173, 87 point, and you lose a half a pip in and a half a pip out, and you don't ever notice that you've basically been charged a pip. Now, FXCM once sent me an email, so I can pick on them. And in the email, they said, "Dear FXCM client, the NFA has come in and give us fines and all that kind of stuff. And right? So now we will slip in your favor. We'll slip for you, not just against you." And I thought that was funny. I just thought that was funny. So anyways, slippage is like a hidden cost. So the classic is you go to some fly-by-night company and they say, "Hey, trade with us because you get the euro dollar, and the spread on the euro dollar is 0.1 pips. But you don't notice the slippage, and if you add that into the cost, you're paying 3 pips, and you could have easily just gone somewhere else and paid the proper rate." Okay? No, demo, what they meant is instead of screwing you on a regular basis, now the NFA has asked them to stop. So now they'll just have bad execution. Like there shouldn't be any slippage, right? So it was funny to say, "Okay, we're going to slip for you as well as against you." I'm like, why don't you just not slip? So anyways. But whatever. I'm not here to comment on FXCM. I've known them for a long time. I haven't talked to FXCM in 10 years now, probably. But anyways. Okay. So here's what I wanted to talk about. Where is it? Here it is. I want to talk about Chinese manufacturing PMI. What does it all mean, Basil? Well, let's go over here. We got to go here first. All right. So you can see that the number is falling in this particular month below 50. Now, these numbers, if it's above 50, it means there's expansion in the manufacturing sector, in this particular case, China. So you could see a drop from 50.9 to 50.4 is not positive, but it's still showing that the entire manufacturing industry has gotten bigger. It's just less bigger than it was. And the rate of the bigness is slowing, but it's still bigger and bigger. So like bigger and 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 bigger, but just less bigger, less bigger, less bigger. And the number that just recently came out shows contraction. So I looked at this and I looked at the subcomponents. Output is down, new orders is down, export sales are down, and I think it says somewhere in here the employment is down as well. However, input prices, that's the price of making the thing they're manufacturing, has gone up, and then they've also had to raise prices. That's what sort of PPI is looking at. And so they've had to raise prices, and they're less profitable. And therefore, you can see it's trickling in where people don't want to buy stuff when they're getting more expensive. Also, you might, oh, here it is. Employment has dropped for the 6th straight month. Okay. So prices are up. And I think the other part is orders that have been placed, you've had to wait a lot longer to get the order because there's a bottleneck. So the factory itself is likely to be slow in manufacturing the product. And then they put it on a truck, but it's hard to find a truck driver. And then the truck gets to the port, and the port is closed or half closed because there's not enough port workers because of COVID. And so now the ship is moored off the coast for 2.5 weeks, and it's got to then come in and be loaded. And so everything's delayed. So orders are down, and output is down. Orders are down, okay, new orders, which means in the near future. And then the output, the stuff, they're making the old orders. So, right, there's a contraction in old order deliveries, or at least production, right? And a contraction in new orders. Interesting, huh? But you can see it's concerning, but not alarming. Because even when pre-COVID, we had a bit of a contraction. But it's interesting. Now, then I went a little further and I looked at this kind of stuff. And this is more sort of not just manufacturing, but the general economy here of China. And this is right from the National Bureau of Statistics. And I want to show you this. Well, there it is. All right. So anyways, monthly growth rate and revenue. Okay. So here's revenue. Revenue is falling. And profits are falling. So you're thinking probably, right, input costs are going up. Okay. So anyway, some interesting numbers here. And that incorporates, basically the entire country. So if you want that info, I'll pop it into the chat. Okay, so to me, it's not surprising, but I watch this stuff to see if there's a change in that towards more positive growth around the corner. Okay, so we understand, like, let me put it this way. We understand COVID's a problem, right? Like, oh my God, there's a COVID problem. I mean, if you remember looking at the Baltic Dry Index about a month ago, we could see the effects of a shortage of shipping containers, or ships actually, because of the bottlenecks at the ports around the world, whether it's the port of Long Beach or the port of Shanghai. Either way, every time a ship gets to port, you have to wait to get in. Therefore, there's not enough ships. Great, but we already knew all that stuff. So to me, that's not news, even though the news we just got out of China just came out. Okay. But I'm like, yeah, I already knew that. So I'm much more interested in when new orders pick up. Because that means you got your old order and you're dwindling down your inventory and you need to make a new order. So I'm looking for, in the next few months, expansion, right? A China manufacturing PMI that goes back above 50, and that'll be my green light. Okay? Yes, Theta, 3 o'clock. Everything's 3 o'clock now. 3 o'clock, 3 o'clock. 3 o'clock, 3 o'clock. Cool. So anyways, hope you find that helpful. We got GDP. Let me double check that. Which GDP? So today is Thursday. Thursday. And, oh, there it is. Okay. Okay, good. Yep. Just standard old GDP. That's good. So that's coming out in about 11 and a half minutes approximately. Cool. We'll also get weekly jobless claims. Cool. We'll get Canadian GDP. Cool. Okay. Personal consumption. Nice. Chicago PMI. Nice. Cool. 4-week bill option. There's a big shortage of these. There's a big shortage of bills. But anyways, cool. So, yeah, so this is a good release. This is going to be great. Okay, this will be great. Great, great, great. And yeah, so nothing's changed in the last 24 hours. Yep. What do you think US dollar now? It looks like it's strong. Yeah, right on, Mr. Kennedy. I got one or two more lectures that I've just put on the back burner. Yeah, I do need to write that up. I thought about it as recent as this morning, so it's in the back of my mind. I think one of the lectures is already done. Like the slides are all done. 30 or 40 slides. And I think it's on international trade. So, yeah, I got to get on with that. Okay, so euro has lost some, but that's typical with dollar strength. Kiwi is still a dog with fleas. Pound is just lost. Aussie is going in circles. Kitty cat can't make up its mind. Is it strong? Is it not strong? So cool. I think, or I hope, today or tomorrow, we will get a significantly improved market. So my goal today is not to go bankrupt. Right? My goal today is when the market wakes up, I want to have money to play with, right? So anyways, my WTI coming down. But you remember we set up a counter trend trade off of Brent. So of course, WTI would come down because of that. So there's the first move. Here's the second move. Target is 76 maybe as low as 75. I don't think 75, but let's say 76 on Brent. So my WTI will come down with it, and maybe we get a little rollsy, reversey, sort of in that 73 area, 72 maybe. All this tells me is, hey, I might be buying it tomorrow. That's right, Thako. It's year end. Watch yesterday's video. I explain rebalancing. Okay, Thako? And also, you have to realize there's a relationship between these things, but they're not chained together. Like, there's a reasoning for why you would do one thing or another thing, but it's not instantaneous. Okay? So anyways, okay, there's right strategy and tactics. Tactics. So for me, strategy hasn't changed, but tactics the last two or days or so are like, I took profit on a bunch of trades. I stopped trading quite a bit. And I'm looking for prices, and I'm waiting for my turn. Okay? You got to know when to hold them, know when to fold them, know when to walk away, know when to run. Okay? Right? So in this case, I'm holding my cards, or, I'm throwing cards away, and I'm waiting for a better hand. That's all. But I'm at the table. So anyways, gold, still working its way down. Gold, maybe down to 1,700. I don't know. So we got to wait. We just got to wait. That's fine, man. Just got to wait. We're not there yet. Okay, bitty. No. Bitcoin went from 40 to 44. Wow. Cool. Well, if you didn't think about the psych level, then there you go. Interesting, huh? Okay. Cool. So I want to see something like that in the stock market today or tomorrow. So let me be clear. I have no rhyme or reason, but I want the stock market to go up big either today or tomorrow. I want like a 2% day. I want giant green candle. That's what I'm waiting for. I want something like this where just out of the blue, seemingly out of the blue, just bullishness again. Okay? And all I have is tea leaves. I'm looking at my tea leaves and that's what they say. And you're like, well, that's not economic data. That's not technical analysis. Yeah. So don't bet on it, but look for it. Okay? So Bitcoin, a big green day, maybe that's a leading indicator. Who knows? But I do want a big, fat, green, bullish last day of the quarter. Everybody that went to cash is buying everything back. Okay? So let's see if there's any evidence of this. That's not what Eurodollar says. Yeah, it must be green tea, right? Yeah, well played, sir. Well played. Eurodollar doesn't say anything like that. So what do I do with Eurodollar? I not buy it. Okay, projected monthly target here is 1550. We're at 1577. So let's say there's only 25 more pips to the downside. We look over here on Pig Dog, and it's already hit its target yesterday and has stopped. So Eurodollar's down, going for its monthly target. We've already hit the monthly target yesterday and it stopped. So even though Eurodollar's down, pound dollar ain't down, which really suggests that this line that we already knew about, we already have this 134.5 could maybe be the October low. But before I'm a buyer, I need a reversal pattern. I don't buy one touches. I think it's really interesting. I'm like, that's the number, man. That's the number we expected. On September 1st. Okay, today is September 30th. On September 1st, we said 134.15 is the maximum projected low for September. You see that? Locked on the 1st, locked in stone. It's not dynamic. On the first day of September, the maximum projected low is 134.15. Holy smokes! Like, maybe one pip lower, maybe just enough for the spread. Look, people had that programmed in as a target. Okay, great. So does that mean you buy it? No. I mean, you could. That's way too aggressive. You might be able to scalp that. That might be a good little, 5-minute scalp kind of thing. You're in it for a session or two. So that's all good. But what I need here as sort of a longer term investor slash trader is I need confirmation that the market is reversed. I cannot and shall not buy a market that hasn't reversed. My job is to buy higher lows. Okay? Now, let's say you disagree with me. That's fine. What if during the course of a year, I only bought higher lows? Would I be successful? What is your thought? I ignore absolutely everything. I ignore all double bottoms. I ignore all triple bottoms. I ignore all quadruple bottoms. I ignore every single lower low. I ignore every level of psychological support. I ignore every support pivot there is. But the one thing I do is I buy higher lows. Then good enough. That's good enough for the girls I go with. Okay? Now, I can do those other things too. Those other things, well, not all of the other things, but some of those other things I talked about, like what's a quadruple bottom? Support. Okay? Support is an opportunity to buy. It's just not a higher low. So it's not trending yet. It's just not falling. It might be rising. Okay? Now, here's the cool thing. You and I work together. We're a team. We're sitting at a desk across from each other. You're over there and I'm here. And we trade the pound dollar. And I only buy higher lows. And now you only, so this is me, and you only sell lower highs. Will you be successful at the end of the year? Will you be profitable? Now, while you ponder that, I want you to think about this. I don't know if you've actually analyzed your losses. Okay? But I would venture to guess, since I've seen hundreds of track records of traders, hundreds. I've reviewed probably 1 million trades. Most of your losses are in markets like this. It's actually the sideways market where you keep buying as a bull, but it doesn't go higher. And then you start selling as a bear, but it doesn't go lower. And you rack up 4 or 5 losses in a row. Because you're not sure of direction anymore. You didn't stop buying, and then you started selling. Meanwhile, nothing has actually done anything except sideways. Okay? Thank you, Morena. And I think what you'll find is in the mediocrity of the markets, when there isn't a very clear trend, that's where not just your mediocre, your mediocrity comes from. Because think about it. If the market is mediocre, then your results should be mediocre. But I think what happens is, if you don't know if you're buying higher lows or selling lower highs, then what happens is you make different decisions in here. You change directions because you think there's a directional change. And what happens is there isn't a directional change. So you have no advantage of a bull or no advantage of a bear. And the mediocre market actually leads to bad results. So in a falling market, you do all right. In a rising market, you do all right. In the mediocre market, you do poorly, which kills probably 40% or 50% of your profits. So here's the interesting thing. If you only did one thing or the other, if you only sold lower highs, when you get in a sideways market like this, you can't trade. And when it when it breaches this area, you also stop trading. So you stop trading here, you don't trade this, 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 but you trade this. See? So you're here, you're out, you break even, you're out, you're out, you're out, you're out, you're out, you're out, you're in. Boom. And what happens is you skip the mediocre market conditions, but you're also really, really, really focused on hitting this because it's the one thing you do. And you get really, 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 really good at that. Theta says, now, is it true that 65% of the market is in a range? Well, you got to be careful with that statistic because usually those that are measuring statistics are looking at daily or weekly candles. But if you're day trading or intraday trading, there's almost always a market. Okay? So like, here's just a random month, right? This is about a month. Okay. Most of you guys would have done worse in here. And then this area would have been easy. Okay. Now, I preach consistency. Okay. Okay. I think for you to get to the next level as a trader, you have to be consistent. I'm not trying to teach you how to make lots of trades and how to make the most amount of pips. That's not my sales pitch. Okay? Once you learn the consistency, then you can adapt, but don't adapt in year 1, year 2, year 3, where your decision making is quite mediocre. But in year 10, you can say, okay, well, I'm going to be short-term short, but long-term long, right? And so you day trade your way down, and then you're like, oh, we're going to stabilize at this price, and then I'm going to look to start buying long here. And you're able to put together fundamentals with technicals, which is long-term and short, right? And you're able to combine the, tactics and strategies and, all this kind of stuff, but not till you're seasoned. Okay? So I would rather you be ready, willing, and able in right market conditions. Okay? My goal is to teach you how to be conservative. My goal is to teach you how to be disciplined. My goal is to teach you how to be patient. And what you do with your superpowers, after I'm successful at teaching you all these things, what you do with your superpowers is up to you. I hope you use your superpowers for good. Okay? And then hopefully I've also taught you that you should have a balance of short, medium, and long-term technical analysis. I want you to be a great scalper, a great intraday trader, a great market open trader, a great day trader, a great swing trader, a great position trader, a great carry trader. I think you should know absolutely everything about this engineering that we do. Okay? You're a profit engineer. We are using technical and fundamental analysis. What's fundamental analysis? Well, it's statistical, right, analysis of economic data. I mean, it's a science. Technical analysis is great, right? So I want you to know everything. Okay. Yeah. So anyways, let's let Euro do its thing. Now, I'm watching this. Okay. Plausible change in direction. Okay. So 12 hours ago when we were up here, I said I wanted to see this, and I'm willing to wait a day or two. Okay, this is interesting. This is interesting. So on the New York close, I might not do the first trade. Remember, I expect this. And that would occur with a big, good stock market rally today. So if I get that, then at the New York close or Asia Open today, I might be selling this pair. Okay? I understand my risk right now is this, but I'm strong. Okay? I'll likely accept that risk under those market conditions. Okay? Okay, but you can see someone's already making tomorrow's trade today. Cool. Short-term target, you're thinking, oh, well, we can take this down to 127, right? Just maybe even a little bit lower. No. Okay, could be further. Got to go out here. Could be more like 126 or 125. So I'd be selling at basically 127.50, going for 124.50. Not today, not this week or next week is really. So, you know, I got at least a couple hundred pips there. 25.50, selling at 27.50, you know. Theta says, Wayne, do you not believe U.S. dollar is strong until the end of the year? I do not believe USD strength until the end of the year. It's true. I do not believe that. Okay? Of course, it can happen, but that is not my belief system. So, Bear is like, hey, would the CAD get stronger or the dollar getting weaker? Well, ideally both. So that's why I started with commodities. Okay? I think Brent comes down another day and then goes up, which means we're getting pretty close to the end of this down move for WTI. So we hit this, let's say today we hit 73, and by Monday, we're back at 75 again. And if that's true, if this is up, so let me redraw this so it makes sense. You ready? This is what I think currently. Okay? So if I get that correct, USD is going down, my friend. He was no ordinary man. He stood about 6 or 7 feet. Now that's a creep I be seeing in my sleep. So we triple teamed on him, dropping our 54Ds on him. The more I swung, the more the blood flew. Then he disappeared, and my boys disappeared too. Then it felt just like a fiend. It wasn't even close to Halloween. Stalk his death upon the streets. My hands were all bloody for punching on the concrete. Oh man, homie, my mind's playing tricks on me. So that's what I think about that. Sorry, couldn't hold it back, Wesley. Couldn't hold it back, man. Bum 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 bum. Bum 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 bum. Yeah, sorry, man. Yeah, you got, I mean, come on, ghetto boys, right? Come on. Come on. I like how it starts though. I make big money, I drive big cars, everybody knows me, it's like I'm a movie star, but late at night, something ain't right. I just love that. It's just such a great open. All right, let's get on with the Aussie. So if US kitty cat down, then I want an Aussie dollar up. Thanks, Lisa. Hey, man, it's not me. It's Ghetto Boys, man. It's Ghetto Boys. All right. So anyways, yeah. So I'm looking for evidence of this. So I like the price, but I don't like the time. How do I confirm time? I use patterns. What do we call patterns? We call it technical analysis. So I'm looking here. This is where bears are going to sell. Okay, they're going to sell at 72.50. Cool. We're at 72. So there's some up till then. Okay, there's some up until then. But so what would I like to see if I were me? Okay, that's what I want to see if I were me. All week into next week, I'll give it some time here. My plan B is not great because it's way down here. And that means all next week is down. So in this case, if I get a higher low, I will buy it. And if I'm wrong, I will lose once. And it will fall to the next level. And then I will once again look for a higher low. Okay. Well, theta, the language that Jay Powell has already given us, that's not speculation, he said it might be November, which means it's probably December. I thought it was January. If you guys remember a million years ago, I said they would actually start in January. And I'm probably correct there. They'll probably announce the taper in November or December, but start January, do 20B a month, and they're done by June. Because he also told us probably done by June. So there's a difference between might and probably. Probably means more than likely. Might means less than likely. Okay? Could be a rabbit, could be. So anyways, it might be November, which means probably not, but probably by December. So they announce in December, they start in January. Cool. Perfect. To me, it don't matter none because it's already happened. So I explained this. Maybe I only did this for the day trading group, but I explained it through the use of game theory. So if you think your neighbor is a thief, it doesn't matter if it's true, you're going to act differently. So if you think the Fed is going to taper soon, you don't need to wait for the taper to be announced. You don't even need for the taper to start. You're going to unwind your positions and go find something new to do. Okay? No, Mike, he didn't say he was, well, my interpretation, Mike, he wasn't more worried about inflation, right? Or as you said, worried about inflation more. No. That he's worried that the transitory inflation will stay longer. But if you listen to him, to Yellen, what other central banks talked about it recently? ECB, BOJ. They're all saying, it's still supply side. They don't say things like this. They don't say supply side. Because that's not kind of, see, they do demand. Okay? They can only do demand. They're demand side. So they come along and they've done the demand side of the equation. And they're assuming, because this is part of being a central banker, that under normal market conditions, supply will balance with demand. And they manage demand. That's what they do. So when there's a supply side failure, there just isn't anything for them to do. So basically what they're saying, is they're like, hey man, we handled the demand side. We did our monetary policy. We did quantitative easing. We got the economy back. And you can see it through no deflation. Remember, inflation's not a problem. Deflation's a problem. So they're like, look, we got us out of deflation. And the other half, in particular for the Fed, because the other central banks don't have the second mandate, but basically the Fed has to worry about jobs. So they're like, look, jobs are back. Now, we're not back to full employment, and there's something else weird going on that the Fed can't. I mean, it's not the Fed's responsibility. There's 10 million jobs out there and 7 million people looking for work. So what the hell? Is the Fed going to show up and put guns to people's heads? Like, get back to work, a-hole? Like, no. But they created economy through the demand side of economics that created 10 million jobs. So they're like, look, it's there. But the supply of labor ain't there, and the supply of gasoline ain't there, and the supply of container ships ain't there. But what the hell is the Fed going to do about that? Okay. So anyways, the central banks are talking about this problem is there. There is a supply chain problem. There is a labor shortage, and there's nothing really that these central banks can do until that goes away on its own. Okay? There's Yeti. They've already passed. They're passing the thing today, Yeti. Come on, Yeti. So anyways, that's kind of what they're saying. So, right. So the worried about inflation more than earlier? No, but they find it interesting, let's say, that the supply side of the equation still has as much troubles as it has. But there's nothing they can do about it, so you just got to wait it out. Oh, you never want to cool the demand. You would never want to do that. Okay? No, you would never want to do that. Okay, it's like, I don't know. I was trying to think of an analogy, and it was kind of there and then not kind of, so I'll just not do an analogy. But anyway, so I'm waiting on the Aussie. I told the group yesterday I might be a buyer of Aussie, and I feel a little betrayed by the Kiwi, and I'm going to wait a little longer on the Kiwi before I'm a buyer. But look, we got all these prices lined up. All these numbers are there, and I've already, probably the last 4 sessions have talked about the end of the quarter, the end of the quarter, the end of the quarter. And I'd like to see some green candles off these prices, and we're getting them. I'm just not ready to be a buyer. So with that, I will see you guys. If you're in my day trading group, we are meeting at 3 p.m. If you're in my swing trading group, we're meeting at 3 p.m. If you're in my portfolio manager group, we're meeting at 3 p.m. in the war room to set up trades for next week and for all of October. So we're looking for somewhere between 100 and 300 pips, maybe more, because wink, wink, nudge, nudge, seasonality might kick in and give us an extra 100 pips on our Oct trades. So I love Thursdays, by the way. Love them. All right. So I will see you at 3. And then, of course, those in the day trading group, I will also see you at 8 p.m. for the Asian fade trades, which might be some great opportunities to get into the trades we looked at yesterday, but I passed on. So yesterday we had the right price, but not the right time. So maybe by Asia tonight, I'll have the right time as well. Wouldn't that be great? Great. And for everyone else, all the subscribers of Forex.Today and clients of Traders Way, I will see you tomorrow, 8 a.m. Eastern Time, here at Forex.Today. Thank you for subscribing. Thank you for clicking the thumbs up button. And thank you for leaving positive comments on YouTube. Have a wonderful day. See you later. See you soon.